Greetings, this is Jeff Scott. It is October 8th, 2017. As you can see, it's 2:18 p.m. Just got in off the golf course. What a glorious day here in South Florida. And this is my top-down review. Now let me play around here with my display. There we go. As you can see, I titled it Breakout and then in parentheses, Bull Trap. We clearly broke out. All the indices either hit their all-time highs either on Thursday or Friday, at least of the major indexes. The dollar seemed to ease off a little bit going into the weekend, and the VIX remains quite low. I also put in parentheses a bull trap. It's hard for me to think that we're never going to see a correction again. It's also hard for me to ignore the fact that this year ends in a 7, that we're going into the heart of October. And if you look at years ending in 7, at least in the last several decades in October, there have been corrections. So I'm long, I'm very long. It's been a couple of great weeks. I always, on Friday, look at some inexpensive protection to take because I'm just waiting for the thing to happen. But to be honest, I lose money on those protection because the market keeps going up. I was talking to John Person. We played golf this morning, and he just said he got back from a money show in Dallas, and he said that people were just saying just buy, 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 and that the market's not going down until Trump is gone. And that starts to get to the time when you hear it's different this time. And every time you think it's different this time, you realize it's not. So be careful. You need to be in this market to make money. And it's been great to be margined and very long, but even strong markets have corrections, and we shall see. I did have a slide a couple weeks ago where I said I thought we were in the early innings of the bull. I still do. I still think that this market goes up much higher, and it'd be good to be a perma bull to some extent. But corrections occur. Corrections are normal, and this is a time when I'd be at least watching and aware of, not necessarily going short. I think the people that are short have been clobbered. Disclaimer, this such for education purposes only, and a recommendation in the spirit of education, not investment advice. I'm a doctor, not a broker. I'm independent, which means I pay for everything. I even paid for John's stuff, his VIP package. And since I pay for everything, no one has any rights for me to say or to tell me what to say about them. So I can be relatively honest, and I use the things I show you. And as always, trading involves risks. You and you alone are responsible for any decisions you make. This is in the spirit of education. It should be taken that way. If I ever do mention options, keep in mind that options are considered to be risky instruments and that you need to know what you're doing. And I refer you to the website of the Options Industry Council. Also note I'm not licensed to be a trader for anybody else. I just trade my own, and not a member of any of the bodies that supervise trading. My style of trading is something I learned from Ian Woodward, this guy up here in the upper left-hand corner, where Ian said to me one day, this is Ian, Jeffrey, I'm not a guru. I'll teach you to be your own guru. And it made sense to me that why should I rely on one person? Why don't I learn from very smart people and rely upon me to put the best of the best together and come up with what works for me? So I like to think I'm a blend between CanSlim, as introduced by O'Neill, improved by Morales and Katcher, taken to the computer by Ian Woodward and his sidekick, Ron Brown. Best wishes to Ron. Those who know Ron and are part of the HGSI community are aware of why I say that. And hopefully Ron will be back and doing his webinars again very quickly. John Person over here. John, I look at CanSlim as a great way to find the stocks that are working right now, the leading groups, top-down investing. John really taught me how to take the trade, how to manage the trade, position size, money management, more importantly, when to take the trade. I can get a watch list, but a watch list doesn't help me unless I know what to do with it. Van Tharp, money management. George Lee, buddy from Western Canada, just a great trader. And then I put this in here, and the easy thing is, I think, appropriate. For those that don't want to do the work, don't want to spend the time learning and want somebody to hand it to you, Guy Cohen of OptionEasy.com, FlagTrader.com has some interesting scanners, tools, and proprietary indicators, which I think do make life easy. And it's not like it's not for power tools as well. I use it, but I think if I was looking for shortcuts and ways to get there on the easier perspective, there's a lot to like about what he has to offer. Again, I mention this every week. John has a 3-day event, Thursday, Friday, and Saturday. I know I'll be there a lot on Saturday and intermittently on Thursday and Friday. John has really gotten very busy with, and interesting with some of the system trading that's out there. And I will hopefully have time to talk a little bit about what's underneath and how I use his indicators. He puts on a great show. He works really hard, and it's worth it. And I hope to see some of you there. This is John's program. His email, his website's personsplanet.com. Stop the tape here if you want. There's his phone number. If you have questions for me, although I'm not affiliated officially with this program, hgsidoc@gmail.com. I am doing a program. This is my only live event of this year, Sunday, December 3rd. Join me as I demonstrate and teach my favorite tools and strategies that have led me to a 7-figure return this year. The percent year-to-dates could probably change a little bit. That was actual percent. It's actually gone higher. And where I've merged the learnings from Ian and John to do something that makes money, is not tied to my computer during the day, requires less than an hour each night of work, and I do this while working full-time building another company. I think that's the critical part. I'll talk about principles learned from Ian, what my best trades are, how I find them, how I manage them, how I use options to increase returns, how I set up scans in TradeStation, Thinkorswim, and then putting it all together. And then we'll find some great picks for Sunday. If you are attending John's meeting, it's $400. If not, it's $500 for the one day. Someone emailed me yesterday about bringing 5 people to the meeting. Somebody once brought 3. That pretty much gets me to full. I can probably take 1 or 2 additional spots. The doc up the road from me, who knows who I'm talking about, I did get your check, so you're on the list. We'll do dinner on Saturday night, and I'll invite John to attend. Although he may be tired from the seminar, but I always do an over-the-top dinner before the seminar. I'll provide breakfast and lunch at the meeting, and then I'm going to take off work on Monday, and if the weather is nice, maybe we can go out and do some fishing. All attendees will get MP4 videos of each presentation, as well as my slide decks. I own a lot of programs. I don't need everything I own. I have a compulsive problem of addiction of buying software programs. I need TradeStation or Thinkorswim. I have a lot of plugins. Some of them I use more than others. Genesis is a great program, but probably more than most people have because it's not supplied by any broker. HGSI is my analysis tool, as well as EdgeRater, and then I supplement it with some stuff from websites and seasonality. I am independent of highgrowstock.com, despite my email address, which is highgrowstock.com. But if you go here, it's a free 30-day trial, no credit card necessary. Under investing strategies, pay attention to what's under my name and what's under Ron Brown. Others will provide information and videos, but the two of us are pretty prolific, and you might like what you see. Stock patterns are cyclical. You need to know where you are. And I said it last week. Every time I think we're about to roll over and begin a significant correction, we get another leg up. And last week, we got another leg up. How far that goes, it's certainly not different this time. I do expect that we'll get into a selling phase before too long. I kind of thought we'd get one in September or October, but I got to trade the market I have. And so far, the market's been a very bullish market. Therefore, I became more aggressive, and I'm pretty long right now. But as I said, I put on a little protections over the weekend and take them off on Monday if the market doesn't collapse. I pay a little bit for it, but I sleep easier too. So Friday was probably the weakest day of the week for some. It was actually okay for the stuff that I trade. And this is sort of a high-level sector review. And what stands out at me is there's still strength in the financials, both the big guys and the regionals. We talked about KRE last time as a way to play that. Look at how weak consumer staples are almost across the board, while discretionary, which is where Amazon lives, is much stronger. Retail mixed, utilities weak, healthcare weak, but not so weak on biotech. Transports mixed, home builders were strong. Gold firmed up on Friday. We'll look at some gold stocks today. And this was really about social media and fame. So change this week than the last. Now, let's just go look in at Thinkorswim. Let's see if I can do this. I want to get rid of this thing, don't I? There it is. So play around here. And let's see if I can pop this puppy out. So E-minis on Thinkorswim, this was the high of the year on all-time high on Thursday. Gave back a little bit inside day on Friday, probably not too significant there. And you could see price closed above the 17 and above the 50, above the 200. Clearly, by definition, an uptrend. OBV is strong, and I think the E-minis look very good, although we'll see them on TradeStation. They're kind of overbought. The NQs finished at the high of the year on Friday. Not a big move on Friday. OBV also at the top there in a nice uptrend. The Dow rather, high of the year hit on Thursday, inside day on Friday. Proper lineup of the moving averages, which are 1750 and 200. Here's the IWM instead of the Russell futures, and as you can see, a low of 134 was hit August 18th, and now it's up to 150, so that's 16, 17 points. So that's probably like a 12 or 13% gain in about 2 months. Russell very strong, although it opened lower on Friday and closed lower, it made up most of the loss. So perhaps the Russell looks a little weaker the last couple of days, but it's been the strongest index of late. The VIX, not quite as low as it's gotten, but it's at below 11, and it really failed multiple times to break the 200 here, and it's come down weak. And then the dollar on the last one, the dollar had tried to rally, and it sort of stalled out on Friday. What I thought was interesting is it sold off hard. This is a 5-minute chart. What do I have over here that looks a little different? But you could see how it broke down on Friday and was weak after the, I guess the unemployment numbers popped it up, and then not sure what took it down. Maybe it was the Euro folks talking tough. But so the markets obviously look strong. We'll come back to the markets in a little bit. On the weeklies, again, all of them look strong. Look at the weekly on the dollar. Even though it's had this rally, it's really struggling at its 200-day moving average. That's interesting. I like looking at Genesis because I could put daily, weekly, and monthly on a single chart. The first column is E-minis, then the NQs and the TFs, then the NYSE and the YMs. Nothing to say here except to say everything's closed near their all-time highs and everything is in an uptrend. Let's talk about some of the underlying issues. This is 10-year bonds on the left, interest rates 30 on the right. And what you can't tell real well, but they've continued to move up, which is this line here. So though the rates are still low, they've had a couple of weeks of moving up, and that should favor banks. AD lines, well, they're leading the market higher. And in fact, if I look at the NYSE AD line, actually the mid-cap AD line here, and obviously it's spiking up, but you could see all the major indexes, and this includes the S&P, the Qs, the IWM, are following that AD line straight up. Breadth, number of stocks, above the 200, and number of stocks above the 40, both moved up again, starting to get in the area where I might be concerned, but not yet really overbought. The 3-month new high low, we talked about this last time that it was getting high. It actually turned down on the week. And I think what you're seeing there is some rotation, because the indices have held up. And as if I look at the daily and the weekly McClellan, I guess the message to me is both the oscillator and the summation index are above zero, and we're not at extremes, so we still have breadth, but not excessive. Talk about breadth. This is my buckets. We take the stocks in the S&P 1500, and we look at each stock and their relationship to their the Bollinger Bands and the center line of the Bollinger Bands. We see that 80% are in the upper half of the Bollinger Bands. That is bullish. But we see only 5% are above the Bollinger Band. So we're bullish, but not to the point where we have to have a reversal. There were no HINDYs, no surprise on the NASDAQ and NYSE. No need to talk about them in an up market. Market tone, it's not perfect. There's still some yellow here, but we're looking at the Woody indicator, which is where my pointer is going in circles. And that shows that the market's mostly green and some yellow, no red. That's bullish, but not super bullish. Sector strength, consumer staples is the thing in red. Other than that, mostly green. So overall, we're seeing improvement in the market. Now, last week I said the canaries were basing and ready to move, and they moved. And they broke out this week to new highs. These are my canaries, and that's probably good news for my portfolio, which has several of them, but might be predictive that the NASDAQ's going to rally up from here. The E-index that I put together in June of leaders in June has been really going sideways over the last month or so, but it's sideways with an upper twist, and it moved up as well off the moving averages this week, but not as impressive as the canaries. On the left, from Bloomberg economic calendar, you could see that it's a relatively quiet week. Banks are closed on Monday. You have your Baker Hughes rig count on Friday. You got some FOMC minutes on Wednesday. Earnings, not a lot, but some biggies. Delta Airlines, Wells Fargo, Bank of America, Barracuda Networks, JP Morgan. There's some definite big stuff. Citibank this week to be watching. As I say in the lower right-hand corner, it's a judgment call to hold stocks over earnings dates. It's bad judgment to not know when your stock's earnings date is scheduled. Market thoughts, indices hit new highs on Thursday as broad market rally continues. Interest rates rise as hurricane influence unemployment numbers confuse, but may have increased chances of a December rate hike. Potential for tax hikes, Trump's continued wall of worry and impact of hurricanes, Puerto Rico potential bond default, and the big fat guy in North Korea. Gold and silver on week's end, in my mind, appear to be firming, which begs the question, has the dollar run its course? While the EU is talking down a strong euro, even while the USD has been rising. Beware market rotation. Despite rising indices, you could lose money in this market, even if it goes up, if you're not in the right indexes, right groups. And oh yeah, don't forget it's October and a year ending in 7. Top-down agenda, as always, now on to the charts. So I want to do a couple things right here. I want to go into let me close this up. Hold on a second. All right, I know my mouse. Here's my mouse. All right. I always look at TradeStation at this point, and I look at some specific things around the indexes. I actually do that on stocks that I'm interested in buying. And I'm going to show you why Amazon gave me a screaming buy on Wednesday and Thursday. So here is the E-minis. And what do I see on the E-minis? I see, here's my 6 points I want to look at. Point number 1, am I in a buy or a sell? These are person buy and sell signals. Green is a buy, red is a sell. This is not a free indicator on TradeStation. It is on Thinkorswim. The second thing I look at is what is the color of the paint bar? That's an Alexander Elder indicator. If it's green, it says the buying window is open. I could hold or buy. I shouldn't sell. If it's red, the selling window is open. I should sell or hold. I shouldn't buy. And then blue, there's really no signal. I can do whatever I want to do. 3, I look at the envelope. Am I in or out of the envelope? I'm above the envelope, still going higher. But typically, the more extended I get, the more above the envelope, the more likely I'm going to go sideways and come back in. That's 3. 4, are there red dots above or green dots below? Those show evidence of MACD divergence and could be additional indicators of a potential reversion. 5, are my bongos red or green? I specifically look at the middle one, the middle dot, which is the weekly bongo. And 6, where am I at on my high jump? When I'm above 90 or 95, I expect a reversion to the mean. So I look at this, and what do I see? I see a strong market, a little toppy, probably needs to go sideways for a while and pause, but very strong market on the E-minis. If I look at the Dow, the YM, ditto. Notice the red dots on the weeklies, again, a sign of a market that is slowing down or might slow down. But as you can see, these red dots can continue for a long time. The NASDAQ, and again, green down here, 58%. The NASDAQ, very quickly, buy on the daily, buy on the weekly, buy on the monthly. Green, green, blue, the red dots here, and it's at the top end of the envelope. Again, it doesn't tell me it's going to roll over. It takes a while, but it suggests that perhaps we're getting extended and might go sideways. Interestingly, we're only at 62% on the high jump, and everything there is green. Then I look at the Russell. Ditto, blue, but in a buy signal, 88%, so again, definitely extended. Bongos green, buy on the daily and the weekly. And then I might want to look perhaps at the dollar. And you can see the dollar has been in a nice up move. Notice the green dots here as it broke below the envelope and then it reversed. It's in a daily and a weekly buy. It's still in a monthly sell. The VIX, notice the high jump is 20. The bongos are red. The VIX is in a downtrend. Now, I mentioned I use this on stocks. So let's take a look at Amazon. And let's go back. Let's just look right here. So it was more than a couple days ago. So notice on Amazon that on this date here, which looks like it was the, so I get this right. Hold on a sec. 28th, 27th, right here. So this is an interesting day because on this day, my high jump was at 0. That tells me that's the most to the downside 2 days in a row that my high jump has been in the last year. So that's the most pulled back from the highs that we've seen. Add to that the green divergence dots and a new PPS buy signal, and you had a 38-point move in Amazon after it gave a buy signal. So Amazon gave a strong buy signal, and I do look at these on the trading stock side as well. So market strong. We knew that coming in. I haven't told you anything you don't know. Next thing I like to do is sort of, again, review that in HGSI. So very quickly, I'm not going to look at everything because we know that everything looks good. Go into Major Markets Plus, and I like to rank them on what's called the top-down analysis view, which is all price and volume. And what do I see? When I see Dow Industrials, mid-caps, and NASDAQ up at the top, I get excited because bonds go against stocks. When the bonds are up, stocks could be weak. I'm also interested to see gold miners made it up here as well, and you can see they're up 2.7 for the week. So now very quickly, just to show how to use HGSI, I'll double-click on the S&P, and I'm going to take this down to a simple view here. Up top are my bongos, the weekly bongos on top. That's one of my buy-sell signals. These here are Hindenburgs. We don't see any now because the market's strong, not weak. 8-day exponential, 17, 15, 200 simple. These are my kahunas. And what do I see? I see a market that's in a nice uptrend. Nothing else to say. Strong market on the S&P 500. The Dow Jones Industrials look just like the S&P 500. The NASDAQ Composite Now looks just like the S&P 500. Give us a great buying opportunity here back in September 25th and 26th. And then the Russell on these views. Going sideways here after this huge run-up. The dollar in the middle of the road, as you see, a very strong pullback. So we had a dollar that fell 12% in 180 days. It then bounced up here and didn't quite have a bearish engulfing day on Friday, but looks like it might be running out of steam. So I need to watch the dollar. The VIX, which we already mentioned, is quite low. Tried to move up on Friday and came right back down, but maybe it is close to where it rebounds from. And then very quickly we saw that gold miners were up near the top. What about gold and silver? Looks like to me like gold had a bit of a reversal day on Friday and wants to go higher. Silver, similar. See a pretty big reversal day. And then we did see that gold miners were up at the top. They actually moved quicker. All of these are at a place that you wouldn't be surprised to and maybe would expect to see them bounce at this level. Next, I like to go into my industry groups, hit the warehouse, and see what industry groups are leading. I have 175. Let's look at two-day force up. We were in the 80 range, so we've given up a lot of our leadership down to 43, and we had only 8 to 10 two-day force down, and now we have 32. So we still have more momentum to the upside, but this is a change from before. Excuse me. So I like to go and concentrate on a couple of the top groups. So just do a right click on semiconductor devices. There's an, whoops. I'm ranking it on raw combo. And NVIDIA is the leader. So NVIDIA has been a great stock. Let's put on some of my other indicators. Great uptrend. Certainly seems like it's slowed its slope late. It's sitting right on top of the 8-day exponential. Everything is green. I don't know if it's got the same kind of energy to move up as it did in the last year, but I might wait till it takes out the PSAR dot if I wanted to get long. Its earnings per share growth rate is slowing down. Broadcom is in a takeover with Brocade. It's been going sideways for some time. They're also a big proponent mover of Apple, so they may do as Apple does, and they started rebounding from the middle of the week on. And then Micron Technology, this one get a great buying opportunity back here in early August, mid-August. It's pulling back a little bit with the flag. Its earnings are not out to December. It's got great earnings per share growth, and I do have a position in that one as well. Intel, hard for me to buy the old tech, but this thing's on a tear. And anything else? And then Skyworks looked interesting, another Apple-dependent stock. It looked interesting because it's sitting down at a place that I like to buy from, which is off the 50. But I need to see a kahuna or something to come in with momentum. So no question, semiconductor devices look interesting. Automobiles. Growth stocks again. Hard to believe that too. Here's General Motors. Broke out down here, a confluence of my favorites. Kahuna, pocket pivot, breakout from a fanning moving averages, a mobile breakout from a squeeze, and a weekly bongo buy. GM too far gone right now, but that's been a great leader of late. And Tesla is sitting down on their 50. They can't make threes fast enough. Containers and packaging typically go up when the economy goes up. Notice that nothing is outperforming the index. I usually don't look for stocks that are underperforming the index, and I don't think I see any here that I really loved. Right click back. Let's look at infrastructure software. Again, just like Intel, Microsoft looks great. Looks like it's about to run. It did have a kahuna coming out of a squeeze. I don't like the earnings per share growth, but I do love the chart formation. Lower left, upper right. Red Hat, similar, a little bit better earnings per share growth and a bigger move up this week. ServiceNow, similar. Palo Alto Networks, a security stock. It's had its misses on earnings and been troubled. Is it ready to go? Maybe. And I'll go through the top 10. I won't go through 10 today necessarily. Application software. Synchronous Technology is selling some units, and there was some good news. It doesn't look like something I want to buy. But look at Workaday. Forget the fundamentals. Forget the fact that they don't make any money. And forget the fact that their market cap is $22 billion for I don't make any money company. Run up sideways and looks like it's launching again with a pocket pivot and a kahuna occurring on Friday. If you look at the weekly, it also is in a nice 45-degree uptrend. I think this looks very interesting if I don't pay attention to fundamentals, and I usually don't. Take Two Interactive, another beautiful chart pattern. Precious metal mining. Tech Resources does copper, zinc, and a number of others. This is one that I've been in and out of. It just had a great run, pullback. Is it ready to start again? It does have great earnings per share growth, at least for the next quarter. Some of the silver and gold stocks. Here's a stock that looks to me like it's done going down. Had a PSA reversal, mobile breakout from a squeeze, a new weekly bongo green, and two kahunas in the last 3 days. First Majestic looks interesting. And I could say similar on American Barrick Gold. Doesn't have the blue down here, but it too looks like it's put at the bottom. Probably less excited about this than I was by the First Majestic. All right. Wealth management. This has been strong for a couple of weeks. Charles Schwab, people must like their TV commercials because their stock looks like it's doing very well here. Sideways, broke out down here. Everything's green. Don't know Jupai Holdings. Restaurants. Just to point out here, I think this is the one that looked good. I don't know this group at all. This chart looked interesting. A gap up from a base in ILG. I know a couple of these made my buy list. Let's see if I see anything up here. Oh, yeah. This is a pattern that I like. This is Dunkin' Donuts. Putting in like a scoop bottom and then a breakout on Friday. Green up here, mobile breakout, squeeze, pocket pivot, and kahuna. And for example, this is a pattern that I like in biotech as well, BioVeritiv. Same pattern. Well, there you go. All right, so that's enough of these. But I go down the top 10 typically. Banks and airlines. Airlines had some strength last week as well. And then I go and I look at some of the scans. So tonight, let's take a look at how I might use the scans. Let's do a group performance analysis, or group inclusion filter. We did this last week. Let's go into tools. And I'm going to make a new one. Group inclusion report. Clear. And let's just look at the smart groups. These are scans that get updated every time you update your software. And let's take some of my favorite. 3x volume. Cool. Pull back to the 50. Squeezing with a PSAR reversal. A mobile breakout. I like Morales and Catchers, Bible gap ups, pocket pivots. I like Dave Ghilardi's sprinters. And from Ian Woodward and Ron Brown, I like best criteria, best of under 15, demand, high erg. ERG 240, I like that. Growth stocks, HGS 100, high profit margins, leaders raw RS, LLURs, stocks and groups to the upside, strong EPS. And then I also know that Morpheus Trading Group, this is a good scan here. So I want to make a group from the list, and we're going to just call this Bull Groups from Smart Groups. Today's 10/8. So it's a very simple thing. And the hypothesis is that these are lists of great stocks. If I'm in a lot of these groups, then I must be a really specially great stock. Sorry, I got a little bit distracted there. I'm going to hit this button and WebGIF. We'll just take a look at these as one of my favorite ways of doing things in HGSI. So here's a list of the top stocks from those groups. So let's take a look at some of these and see if we see anything that might be worth buying. I see several that I own. So you're going to find here, if you go into user groups, here's web gems from the internet, 30 of them, hit that. Now let's just take a quick look at these, and I think you'll find some good stocks here and give you an idea of how you could tame the system by just looking at the top of the top. Applied materials, lower left, upper right. I have a position here and a nice flag and a breakout on Friday. It's got great earnings per shares compared to the multiple. I think this thing can go a lot higher. I'm long applied material. NVIDIA, we already talked about. Trade Desk, I don't know this from Adam. I owned it at one time. I sold it too soon. It broke out here after earnings, mobile breakout from a squeeze, pocket pivot, and a kahuna. Don't know enough about the stock to say anything, but great pattern. Micron we looked at already. Arista Networks is another lower left, upper right, great stock. I always think it's too expensive, and then it goes higher. Thor Industries, they make motor homes. This is exciting because they have to put all these people who are displaced in Puerto Rico, Houston, and somewhere to live. And this might be a vehicle. It's already broken out. Centene, Medicaid provider nationally, just bought a provider in New York, which broadens their appeal. Lower left, upper right, this looks extremely strong. Lam Research, a semiconductor stock, it's expensive stock. ASML, another semiconductor, they look the same. And by the way, this is their industry group. They're both tracking the group, the gray. Here's the all-stars that we just picked. Align Technology, cleared orthodontics. Sort of a bad-looking shooting star there. Every time I think this thing's coming down, because I don't get the stock, I don't get the story, I don't get the multiple, but every time it happens, it goes back higher. But I don't think I'd be chasing this one right now. Abiomed, they make heart parts, medical device, beautiful stock. Certainly in a growth phase here, probably extended, and you can see it sitting right at the top of the high jump. Corcept Therapeutics, one that I bought off of the 50, and it's been a nice hold for 5 or 6 points. Look at the earnings per share growth. High multiple, but huge growth opportunity. Young stock, like this one a lot, still do. Old Dominion Freight, the truckers broke out a couple weeks ago. Teradyne, semiconductors, lower left, upper right. Don't know anything about this, but it's another logistics trucking company. Express Expedited, that lower left, upper right, a little bit loose for my taste. Nutrisystems, great TV commercials, worked for Marie Osmond. I don't know if this was an earnings miss here, but been basing, is it ready to go again? Ultra Clean Holdings, a semiconductor manufacturing stock. I own this one, putting in a flag here. I'm looking for it to break above the flag. AEIS, an alternative energy, going sideways here. Control 4, if you have home automation, you probably have their stuff. Excelis Tech, another semiconductor. MKS Instruments, another semiconductor. And Form Factor, another semiconductor. Integris, another semiconductor. Brooks Automation, another semiconductor. And then a cheap energy play, SRC Energy, with great earnings per share growth. I have to do some diligence on this. I don't know much about it. And then like Thor Industries, Winnebago looks good. And why do they look good? Because you got to have places for people to stay. And then YY, putting in a little flag here. If I wanted to buy YY, it's simple. I'll put this line down here. And when it closes above that line, I'll buy it at the next day's open. Or I'll buy it intraday if a daily intraday bar closes above that point. NPEL, a Macau gaming stock, growing earnings per share growth versus PE. And then Wynn Resorts. Had a rough day with the shooting. Is it ready to go higher? Great earnings per share growth. And then lastly, Celgene. I made a mistake on this one, I guess. I don't think so. It had a downgrade on Thursday and it traded down, bounced up off the lows. I actually bought some more off the lows. I still think Celgene long-term is a great biotech story. But as I said, I got a haircut this week. So when I do my analysis on a nightly basis, here's what I do. Here's how I keep it under an hour. The first thing I do is I go into Major Markets Plus and I do what I showed you. I look at the top-down review and I would look at, are the indexes high or low? What's working? Then I look at the same ones I looked at with you, the S&P 500, the Dow, the NASDAQ, the Russell, the VIX, the dollar, gold, and silver. That gives me a great sense of what the market's doing. Then I hit 07, hit Warehouse View, and this brings up my industry groups. And I look at the stocks that are two-day force to the upside. I right-click on these, and we heard some of these were strong. Switch to index group, and I usually look at all the groups that are outperforming the index. I build a watch list from the top 10 groups, and then I do just what I showed you, except what I do, if it's set up the right way, I do a group inclusion filter, and then clear all this. I have a selection here, which is top 50 group with, and I'll run this one. Just going to run it real quick. And I will look at these stocks and then I'll call it a day. That's how I can do it quickly. Obviously, I'm also reviewing my own portfolio. On that note, I'm going to call it a day. Be careful out there. The market looks extremely strong. I'd feel a lot better if it was the 1st of November. Every time I think it's different this time, it's not. It's not this time either. Again, I'd love to have a couple more people attend my meeting. It'll be a great meeting. Look forward to seeing you. Please email me at hgsidoc@gmail.com if you have any questions, and I'll see you next weekend. Bye, everybody.